Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. It's created exclusively for NMP TV. What a week last week. Headlines being dominated by the Russian invasion of Ukraine. And of course, what's really important here is the major consequences, loss of life. I mean, these are things that are just awful. But it's our job to report to you and tell you exactly how that can impact both mortgages and housing. So let's talk about what's going on first. That Russian invasion of Ukraine could lead to some further escalation. Already sanctions by the U.S. have begun, so we're wondering what that Russian retaliation is. This seems to be something where Russia, with the support of China, its biggest supporter, now is brazen enough to make these moves because perhaps China can buffer some of the U.S. sanctions. It also means that China blesses this move, which means that Russia would bless the move of China potentially into Taiwan. Now, Taiwan makes most of the semiconductor chips, and there's already difficulty getting them. It goes into so many things to deliver homes and cars and much, much, much more. So this unfortunate situation, escalation of it, just we've got to pray here and hope that things do settle down and are somehow resolved. Russia said, hey, we'll be willing to talk, but only if you tell us what we want to hear, only if Ukraine decides to lay down their arms. Difficult situation, as I'd mentioned, to try and unravel. But with respect to how it affects the financial markets, we do see the stock market does not like this situation, of course, and money goes into the safe haven of bonds, but would only be parked there for a period of time until we see potentially some sort of a resolution of this conflict. Now, the news that we had regarding housing last week showed that both new home sales and pending home sales, you signed contract on existing and homes that are new construction, were a bit below estimates. You know, the numbers like we saw in pending home sales, which is existing homes that represents 90% of the marketplace, it was expected to be down just a little bit. It was down 5.7%, but the previous number was revised higher, and because of that, it's really close to down 4%. Now, these are the amount of homes being sold. So while the activity is a little bit slower, it doesn't mean prices go down. It doesn't mean the housing market's weak. And think about it, if there were more homes available. Do you know in the last 7 months, inventories dropped 34%? I mean, it makes trying to find a home more of a challenge. So maybe more homes on the market, there would be more purchases out there. And listen, this is a slight decrease in the face of prices going up 19% and interest rates being about 1% higher than they were last year. So I think this shows the undertone of strength in housing, not weakness, just because there's a lack of sales. Look, if I wanted to buy the newest gadget and device and it got sold out, you could say, well, they're not selling as much, but that's only because it's not in stock or isn't enough in stock. So just think of it in those terms. So the week ahead has some big news items as well. We will get news on the job market. It is jobs week. So we're going to get both BLS and the ADP numbers. They're expected to be around 350,000 job creations with a 4% rate of unemployment. Both of these numbers, of course, both of these instances can move the markets. That's why we want to pay close attention to it. But the real backdrop here is Russia, Ukraine, and then how does the Fed now respond? Fed was thinking about maybe hiking in March by 50 basis points. Does that now get tempered? The bond market, actually, believe it or not, wants to see Fed rate hikes because they want to see inflation lowered. But it becomes problematic now because Ukraine has a lot of the world's resources, both when it comes to food and metals. This is something that can cause prices to rise, and the Fed can't control this with rate hikes. So again, many twists and turns here. Important levels that we're at on the 10-year Treasury is 2.05. A move above that would indicate that the inflation talk is really taking center stage and dominating. 1.88 on the downside, that would indicate that inflation is now moderating. The Fed may be hiking to take measures against inflation, but this can all get whipsawed and changed quickly. It's a very wide range, and that's why you need to be watching MBS Highway every day, where we break this down for you and give you advice what to do for your clients and your referral sources day to day, and how to really interpret the housing news. Talk to you next week.